Are you ready for a more detailed breakdown of the 2022 Philly metro housing market and our 2023 projections? Well, stay tuned as we get into the weeds with more data and analysis. Hi, this is the next part of our multi-part series of the 2022 housing market recap, as well as projections for 2023 with more details specifically for the Philadelphia metro area. If you did not see our first video, please make sure that you watch it to give you a little context of what we're talking about in this video. The little link down at the bottom will take you to that video. In our past video, we covered an overall view of the U.S. national statistics, some of the underlying themes regarding inflation, mortgage rates, demographics, and other relevant data. Now we're going to get into some details of what took place in 2022 in the Philadelphia metro area. Then we'll go into details from some specific school districts, which is how many people begin their home search in this area. This will also give you some insight on the data that our team of realtors here at the Cyr team gathers, analyzes, and uses to understand markets for our buyers and sellers. What we'll show you comes from our own proprietary systems that we have developed over the years of real estate practice. So we're going to look at the 5-county area: Chester, Delaware, Philadelphia, and Montgomery counties in Pennsylvania, and Newcastle County in Delaware. We're bordered right along the Delaware border, and so we do a lot of business there, and there's often a lot of cross-state movements between Pennsylvania and Delaware, depending upon different needs of clients. Here's some trends to note. No surprise, we have a decline in year-over-year transaction counts. A shift in demand that took place mid-year as mortgage rates increased. There was a frenzy of activity that peaked in the March-April timeframe. We had been seeing up until this time a significant number of transactions that were settling over the asking price. We will see that that has shifted to be something that's more comparable to the 2019 market. You'll see that the two periods during 2021 and 2022, where April to June and March to July, respectively, were very, let's say, frenetic. This is no surprise, because that's the spring market and that's when the majority of transactions take place. We saw a double-digit increase in prices for the past 2 years. We've seen that most of the increase of 2022 took place in the first part of 2022. Now we're starting to see more tapering and stability of prices as we go into 2023. The lack of inventory and low mortgage rates caused prices to rise. Now, extremely low inventory and higher interest rates are causing the market to seize up. We have no product to sell, and we no longer have low mortgage rates. So as we talked about in our previous video, the use of the term frozen is a good way to explain the housing market of 2023. Just to give you an idea of the time sink right now, we are in January of 2023 doing this video. So let's go into a little more detail here. We have a lot of different charts I'm going to explain as we go through. We're going to be looking at the lower graph here in blue and the middle graph in green and red. I use the upper graph to analyze settlement price trends. Looking at the blue graph, we see the number of transactions by month. In Chester County, which is known as being one of the wealthiest counties in Pennsylvania, we see a continual decline of total number of transactions on a monthly basis. In 2021, we had roughly 8,400 transactions. In 2022, we had almost 6,300 transactions. That's a 25% drop in transactions from the previous year. Let's look at the graph with the green and red bars. This graph shows by month the number of settlements that took place and what percentage of them were settled at the asking price or better, and how many settled below the asking price. Any settlement that's settled at or above the asking price is going to be reflected in the green. Anything that's settled below the asking price is going to be indicated in the red. So as you can see, we had this tremendous surge in 2021 in May and June, where we had 80% of the settlements at the asking price or better. That eased up a little bit in the fall and winter. As we go into the spring months of 2022, heavy demand, little supply, and the interest rates starting to increase started getting everybody nervous. So we had heavy demand, and that caused people to panic. We had instances where 80% of the homes were settling at the asking price or better. Now, as you can see, as interest rates come up and we've got a reduction in demand, we're seeing a more even split between those homes settling above asking price and those homes selling below the asking price. This is starting to look more a lot like the 2019 market, where we had a little more balance. Delaware County, which is just adjacent to Philadelphia, had approximately 8,200 transactions occur in 2021. In 2022, we had about 6,700 transactions occur. That's about 18.6% fewer transactions than the previous year. As the interest rates went up, demand started to go down, as well as fewer people put their houses on the market because it was going to be more expensive for them to buy something. You can see similar results as Chester County with regards to the red-green chart of settlements above and below the asking price. We had a strong spring in 2021, strong spring of 2022, but now coming back up to parity at almost 50-50 as the number of homes selling at the asking price or better is almost equal to those selling below the asking price. In Montgomery County, another county that's on the northern side of Philadelphia, the third most populous county in the state of Pennsylvania, they had 12,000 some odd transactions in 21 and 10,000 transactions in 2022. So we had about a 18.5% reduction in the transactions from the previous year. Once again, a fairly significant activity in May and June of 2021 and May and June of 2022. Over 75% of the transactions were closing at the asking price or better. Now that has slowly drifted back down to more equilibrium, similar to what we saw around April of 2019. Looking at Philadelphia County is the city of Philadelphia. We had almost 20,000 transactions in 2021 and 17,200 in 2022. That's a 13.5% reduction in the number of transactions. Their market is a little different. They don't have the same level of demand. Clearly there were properties that would move quickly, but not with the same kind of velocity as we saw in the suburban counties. We didn't see the 80% of transactions closing at ask or better. It was more around 60% or so of those would settle at the asking price or better. As we moved into 2023, we're now seeing that 3/4 of the transactions are closing below the asking price. Clearly a shift in demand in that market. They have some underlying things that could be affecting their market, the socioeconomic pressures, some elevated crime, as well as a desire for larger spaces and less congestion. We can see clearly the trending is such that I would say that in Philadelphia, it is a buyer's market and not a seller's market. Let's look at our bordering state of Delaware, where we often do business as well. Similar to some of the outlying counties, we had a 20% reduction in the level of transactions in 2022 from 2021. And we see similarities where they had a significant percentage of their transactions closing at or better than the asking price. But that has slowly trended down now and started moving towards equilibrium, almost near 50-50 split as we're going into 2023. We track this data at a county level. We also track this data at a school district level. Not everybody is doing this, but we like to get an idea of where the trends are going and what the likelihood is of property that's on the market selling or settling in a certain price range. This helps us position our pricing better, helps us understand what the demand level is at any given time in any given market. And on the buy side, it also gives us an idea on how to game plan a specific transaction. If we see an area that has had a lot of slowing down and more of the properties are settling below ask, then clearly we suggest making a more aggressive offer. Now, we also gather data at a more granular level. In our area, school districts is how many people look for homes and understand home values. We're going to show some representative samples of schools in the Philadelphia metro area. We have maybe 15 to 20 different school districts that we keep track of and have data for. This helps us understand things at a more local level. As we continue to remind people, much of what you see about the housing is at a national level or regional level, regardless of what you see statistics-wise. Especially at the national or state or regional level, keep in mind that all real estate is local. You can have two similar houses. Notice I didn't say identical because all property is unique. But you can have two similar houses, similar square footage, similar style, similar builder, similar size lot, but because of some specifics about maybe where they're located in the school district or what school district they're in or what they are near or what they are not near, that can have an effect on valuation. Here's an example of our data. There's a school district in Delaware County, one of the suburbs of Philadelphia, Garnet Valley. We can see that the transaction count in 2022 was significantly less than what was in 2021. We can see that we had an increase in pricing, that the average sold price increased about 11% from 2021. Much of that increase took place in the first half of the year, and prices now have stabilized. Homeowners have seen a strong increase in their equity of somewhere between 20 and 25% over the past 2.5 years. We can also see the number of transactions that were over $1 million. We are not in California, and not everything starts at $1 million here, so $1 million is a lot of money no matter where you are. We can see that as prices started going up, we had more transactions crossed into that $1 million category. This gives us an idea of how many transactions took place at $1 million or more, how long they were on the market, and what kind of increase they had from the previous year. Let's look at Westchester, another suburb of Philadelphia in Chester County. The number of transactions were almost 25% fewer in 2022 than 2021. Their pricing increase was up 13% from the previous year. This is still a very strong market. It's a very desirable area. It has, as far as property taxes, probably some of the lower property taxes in the area compared to some of the comparable areas near it, which makes it attractive. Pricing is still firm and strong. They're going to see a little bit of a slowdown in the increase of prices, but they'll probably still have an increase in prices going into 2023. Probably not double digit, but probably single digit. They had 19 more $1 million home sales than they did the previous year. Properties on the market at $1 million or more took about 20 days on average to sell. But they had flattening of some of the prices there. $1 million homes sold for about 6% less in 2022 than they did the year before. Looking at another school district, Downingtown. Once again, another 25% reduction in transactions. Their pricing was up almost 8% from the previous year. This is a desirable area as well. Very strong school district. You get a significant home for $1 million in this school district. There are 28 sales of them that averaged 34 days on the market. The average price is about 2% less than it was the year before. Let's look at another school district, this one in Delaware County, Pendelco. The transaction count is down. Prices are still up. This is a more affordable area for most people. As you can see, the average selling price is about 50% of what it is in some of the surrounding school districts. So they've got more affordability. They just need to have more product like everyone else. Demand was strong still in this area, having price increases of 11% over the previous year. No $1 million sales in this school district. Now let's go over to Montgomery County, near what they call the main line of Philadelphia. Very desirable, high-end neighborhoods. Lower Merion School District. We can see that once again there was a 20% reduction in transactions. The average sale price here is $858,000. That's an increase of 5% from the previous year. It had 242 transactions of $1 million or more. That's actually down from the previous year by about 40 transactions. They average about 28 days on the market. The average price in the $1 million range is over $1.6 million. Very expensive area. You can see that this is where the more affluent buyers like to make their purchases. Another strong school district in Chester County, Great Valley. Once again, 20% reduction in transactions, a 12% increase in sale price. This is slowing down as well. They had 83 sales of $1 million or more with an average of 30 days on the market. And their price point was about 8% lower for $1 million transactions than the year before. Crossing the state into Delaware, another reduction of transactions. They had a lower price point here. It's a little more affordable. They had a 10% increase in the average sale price from the previous year. The $1 million transaction count is lower. Their time on the market is a lot longer for these properties. They're usually a little older and they take a little longer to sell. One last graph like this, we now look at the city of Philadelphia proper and we can see that there was about a 13% reduction in transactions. Their average price increase from the previous year was only 1%. I think that's actually dropping now. We may see some price erosion going into 2023. There were over 400 transactions over $1 million, but that was 34 transactions fewer than the previous year. It takes an average of about 70 days on market to sell a $1 million home in Philadelphia, and they saw a reduction of about 2% in price from the previous year. So demand is starting to wane on the larger ticket homes in Philadelphia. There are a couple things I want to illustrate in these next couple of slides. I want to talk about the erosion of value. You know, we talk about the frustration of buyers. We're going to show you in the past 5 years the price of the home has increased. We know that. But dollar for dollar over the past 5 years, the size of the home you get for that amount of money has decreased. We hear terms about terminology called shrinkflation, which, for example, manufacturers used to give you a candy bar of a certain size for $1. Today, instead of raising the price, which everybody would notice, the manufacturer makes a slight reduction in the size of the candy bar. So it becomes very difficult for you to notice that they've made a change in size. but that change in size is really giving you less product for the same amount of money. Well, home buyers are experiencing this same type of thing. So we did a study on 2 different counties, Delaware County and Chester County in the Philadelphia metro area, at 3 different price ranges. We wanted to show you how much house you used to get for a certain amount of money and how much you get today. So let's take a look. We looked at Chester County. The home sales in the price range is between $1 and $1.2 million from the years 2018 to 2022. We also took the average square footage from those home sales by year. Here's what we found. In 2018, you'd be able to get a home with an average square footage of about 4,800 square feet. In 2019, you would get a little smaller home around an average of 4,600 square feet, about 96% of what you would have had in 2018. In 2020, you would get about 4,500 square feet of house. That's about 94% of 2018. In 2021, you get a 4,200 square foot house, about 88% of what you have gotten in 2018. And in 2022, you get a 3,900 square foot home, in which is about 82% of the same size you would have gotten in 2018. Today, you're getting almost 900 square feet less of space for the same amount of money that you would have in 2018. This is what buyers are looking at, and this is what gets them frustrated. Let's look at the price range between $600,000 and $750,000 in Chester County. In 2018, you used to get a 3,700 square foot home. In 2019, you got a 3,500 square foot home. In 2020, 3,400 square foot. In 2021, 3,300 square feet. And in 2022, you get a whopping 2,800 square feet of home. So today you get 75% less home for the same price as you would have been able to get in 2018. Here we show the price range of $450,000 to $550,000 in Chester County. In 2018, you get almost 3,000 square feet of home. If you follow this all the way down, in 2022, you get 2,200 square feet of home. You are losing approximately 800 to 900 square feet of space for the same amount of money. That's a significant reduction in how much home you are getting. Now we put together a table to show these changes along with the average price per square foot. This will break down the year, the average price range, the average square footage, and the percent change, as well as the average price per square foot. This shows what the buying community is experiencing in the marketplace. Now add to that the increased cost of borrowing, and you'll understand why buyers are becoming more discerning in their purchases. This will also explain why it's becoming challenging for buyers to move up to a larger home. Let's take a look at Delaware County. We have 2 bordering counties to Philadelphia. Delaware County is adjacent to Philadelphia County. Chester County is adjacent to Delaware County. So there's a tendency for everything to move west out of Philadelphia, because if you go east, you're in New Jersey. Many people start in Philadelphia, go to Delaware County, and then may move to Chester County. In Delaware County, homes sold between $1 million and $1.2 million used to have approximately 4,700 square feet. If you track all the way down through the years, down from 2018 to 2022, you'll see that today you get a little under 3,800 square feet, or about 80% of what you would have been able to get in 2018. At the $600,000 to $750,000 price range, you used to get almost 3,400 square feet of home. Now you're getting about 2,600 square feet of home. And if you look at the $450,000 to $550,000 price range, you used to get 2,600 square feet of home, and now you're getting somewhere around 2,000 square feet. 77.7% of the size you would have gotten in 2018. In the table, you can see here the different prices per square foot. You can see that as the years progress, the price per square foot continues to increase. You must keep this in mind to understand this burden is upon the buyers as they're thinking about making a purchase. Think about this as a seller. You have a certain size home that is going up in value. You may have done nothing to it other than the fact that it's sitting there. But because of what's going on with the way the marketplace has transpired, you're picking up extra equity in your home as a result. This is unsustainable. At some point in time, people just stop buying, and we're starting to see some of those effects right now. We've covered a lot of material. Our next video in this series will provide our forecast for the housing market for 2023. Make sure you click on the subscribe button so you can know exactly when our next video is posted.